All right, we're talking about the automotive sector, but really it's not just the auto sector. There are other indicators of the economy, high-frequency indicators like we call them, HFIs, which show that the Indian economy may be a bit on the mend. Look at GST collections. The GST mop-up in the month of September has hit 1.47 lakh crores, and it has been consistently above 1.4 crores. 1.4 lakh crores, I should say. And also power consumption has grown more than 13% if you look at it year on year. Consider the other high frequency indicator, which is air traffic, which has remained resilient. Expectations are there that there will be more growth, especially in the festive season. Remember, Q3 is supposed to be the strongest as far as air traffic is concerned for all the kind of traveling that we do around this time of the year. So let's put these under the scanner and see what it really tells by way of the sustainability of this as far as growth is concerned on the Indian economy and the trajectory it's on. Dr. Radhika Pandey is Senior Fellow at NIPFP and Mythili Bhusnurmath is our consulting editor. Great to have you both ladies this evening. But coming to you first, Radhika, among the high frequency indicators, we talk about GST collections. Clearly, it has been on an uptrend. It has been above 1.4 lakh crores, that mark for at least 7 straight months. Even the September PMI number I've been looking at, it's come in above the 55 level. That shows a growth trend too. So should we draw confidence from this, according to you, that the business and industry side of the Indian economy are still going all guns blazing into what seems to be the onset of a global recession?
Yes, I do think so because we are seeing a broad-based recovery. It's not just in one or two indicators. We are seeing across a number of indicators that they are showing an uptick. You mentioned some of them. Also, if we talk about, say, bank credit has been picking up and it's in double-digit growth for the last 3-4 months. Retail credit is picking up. Credit to industries is picking up. So there is a general revival of both consumption as well as investment side. One part of it is due to the onset of the festive demand and also due to pent up demand. But there is also a kind of general optimism that is picking up because if we see the capacity utilization of companies, that is also picking up. We see new projects being announced that is showing an uptick. So yes, we do see as of now, for the last 3-4 months, we are seeing a revival of sorts in both consumption side indicators and investment.
Yes, indeed, you're right about this, Radhika. The other aspect, like you mentioned, is credit growth, and that too seems to be on this uptrend. Non-farm bank credit growth is up 15% in August. It has been 16% in September. But various conversations we've had about this, Mythili, and the several macro indicators that we've been looking at, do they come together to tell you a story that seems to be sustaining for a longer period of time, Mythili? That kind of holds good, all these macro indicators that we're looking at, besides the HFIs that we are currently discussing?
Well, Vikram, you hit the nail on the head when you use the word sustaining. So that really is the question, whether the kind of numbers that we're seeing, the high frequency indicators, whether that will sustain into the future. And remember, we're talking against the background of a global recession. In the last fiscal, exports had given substantial support to the Indian economy's recovery. But now this year, we're not going to see that kind of recovery simply because even when the dollar, vis-a-vis the dollar, the rupee has depreciated, that should normally give some support to exports. The fact is that global demand is falling, which is why we've even seen the Reserve Bank of India in its latest monetary policy announcement lower the growth forecast for this year from 7.2 to 7%. So clearly, despite all the talk of the economy doing so well, despite the governor's confidence in the economy, India being very resilient, etc., the fact is that the RBI itself lowered its growth estimates. So the point is all this going to be sustaining? And that really is the crux of the question. I don't think so. Let us see, unless the global economy improves dramatically, the war in Ukraine ends. As of now, high frequency indicator, yes, there is some pent up domestic demand, but I'm not sure whether this will sustain given the fact that the global economy itself is heading into a downturn.
Radhika, would you agree with what Mythili is saying? Because, yes, for the moment, we have these macro indicators, and they seem to be pointing in a direction that says that festive demand may be holding up. There is, like you mentioned, that all that pent-up demand because we've had 2 years of COVID. So people are going all guns blazing, and perhaps we're seeing that in the number of people traveling and such. But do you think that in the light of what we're expecting by way of a global recessionary trend, that India can truly be an outlier? Is that even possible is what I'm asking you from your study of the economic picture and how India has behaved in the past while there has been a global recessionary trend.
Surely there are global headwinds, and that will have an impact on growth. Also, because there is a monetary tightening going on, the Reserve Bank of India has already hiked rates 50 basis points this time also. So interest rate is rising. That is one headwind. Global recession and export slowdown, that is another headwind. Uh, so these will have an impact, and these will put some brakes on the trajectory that we are seeing. But even then, if we see in relative terms, if we get a growth of around 6.8 to 7%, that will be a kind of outlier as compared to what we are seeing in other countries, be it inflation, be it global growth. So there will be some slowdown going forward, definitely. Still, India will be an outlier in terms of growth rate. Even if it attains somewhere between 6.5 to 7% growth, it is reasonable given the current circumstances and the challenging environment, because domestic consumption is holding up. So export demand definitely will go down, but uh, even though export demand has weakened, domestic consumption is holding up despite increase in interest rates. We till now we have seen that credit demand is going strong. So there will be some weakening going forward, but even then the
Yes.
demand and the growth rate will be
Yeah, so
satisfactory.
domestic demand remains to be the key factor at this point,
Yes.
though there has been a nudge from the finance minister, Maithili. CapEx is not really moving on new projects. And in fact, if you look at Q2, it has gone down, it has declined. Expenditure on new projects has slowed down for the second quarter and the second quarter in a row. So these expenditures that we're doing on new projects has gone down 26% quarter on quarter and 4% year on year. What would you ascribe as reasons for capex not picking up, despite the kind of measures like PLI, etc., being offered by the government?
Well, the government has been trying. I think they've announced a number of programs, whether it's the PM Gati Shakti or whether it's a PLI program, etc. But the fact is that the animal spirits really have not come back into the private sector. As long as there is demand, is not sustained, and we're going to see demand hit not only by high interest rates but high inflation, because high inflation really hits consumption, and that is why everybody says, all economists agree, that the real key to sustained economic growth is low and stable inflation. Until we get there, we're not going to see growth revive in a big way. So, yes, as Radhika says, our growth rate will seem better as compared to the rest of the world. But remember, we also have the largest number of people below the poverty line. So, the fact is that these are numbers that don't do us enough credit. They don't measure up to our potential or to our need. And that really is a cause of anxiety. Is this the best we can do? Is this all that we need to do also? So, that really, I think, will remain a cause for worry.
And very quickly, if I may ask Radhika, putting more money in the hands of consumers, is that something that would change things around? Because you did mention domestic demand, and perhaps if the government works towards doing that and more of what it has done already, do you think that further spurs the economy and makes it stronger, or that's something that we can ill afford right now in the kind of scenario we're in?
So I think that should be done. There should be some reduction in personal income taxes. There should be some rationalization. We've seen one stage of reduction in corporate taxes. We should also see that there was expectation last year also, but that did not happen. Many associations have been voicing this, that if we want to have a sustained revival in consumer demand, reduction in taxes holds the key to that. So definitely that should be there, because if we consider inflation, if that will be triggered by that, I don't think so, because inflation primarily as of now is global driven headwinds due to global factors, edible oil, crude oil. and so on. So I think that will really help in improving consumer sentiment and will give a kickstart to the economy.
Fair enough. Mythili Bhusnurmath and Radhika Pandey, thank you so much for joining us with your perspective on what we are seeing by way of macro indicators, whether demand is going to sustain at the domestic level or not and hold our economy together. That's something that we are watching as a strain very closely. Meanwhile,